Candace Mullins will be our next speaker. She's the Managing Director. You're welcome to come up already. Managing Director of the Tax House. I'll just give a very brief resume of her. She was born and schooled in Johannesburg, studied at Rhodes, qualified as a chartered accountant. Going to skip your articles. She lectured at Rhodes University for 7 years, and I think it was in tax, if I recall. And then entered the world of consulting, currently involved in consulting. She's a partner of the Tax House. She's been actively and closely involved in the professional development of staff and the growth of that business, instrumental in making the services of Tax House available over the country, South African, and mainly specializing in the small and business field. And last 2-3 years ago, she qualified as a BBE approved registered auditor. So welcome, Candice, to the floor here. Thanks, Candice.
Hi, everyone. Thanks for joining us today. I'm so used to walking around, so I'm going to have to stay very still so that the video can get me in one position. I think the reason that I have been asked is obviously because of my academic history at Rhodes University. It was a wonderful time of my life, and I see some of my previous colleagues are here over this week. I have been in private practice for 8 years, and most of my clients are in the SME area, small to medium-sized businesses, and so it was very interesting to listen to Keith, because I would agree that we are about to see a tsunami of business rescue, and certainly what I'm going to be touching on today is going to be touching on the loans, and especially debit loans that are arising, and what those implications are from a tax perspective. When I was asked to speak about profit withdrawals, it is such a large topic. I had to contain it, so I'm afraid I'm not going to be covering everything that I would like to cover in this. Have I got 15 minutes left? No. Okay, so let's go ahead and see how much we can cover. Let me just see. Okay, this is there we are. All right. There we go. Just as in terms of an agenda, I'm going to be briefly talking about tax rates, just so that we have some sort of base in which to start. How will profit withdrawals be taxed? What sort of rates are we looking at? We're then going to move on to the types of distributions and where we're going to be falling in the Tax Act. And then I'm going to just briefly touch on trust distributions. And of course, I think we must mention the Davis Committee recommendations when we do touch on that. I'm not going to go into that in too much detail. Okay, so just looking at a typical SME, either an individual or a trust will be a shareholder of a corporate, and the funding of that corporate is either going to be through shareholder loans or through equity. So I think in most instances of what I'm going to be speaking about today, we're going to be looking at the relationship between these entities and how profits are distributed up to the shareholders. Okay, let's just look at the income tax rates. I've just tried to summarize it on the next 2 pages. Firstly, we can look at the income tax rates themselves in terms of normal tax, and then we'll look at the CGT on the second page. Company tax, normal companies, as you know, tax rate of 28%, and then the small business corporations vary from 0% right up to 28%. 550,000 Rand taxable income being the top tax bracket. Sorry, let's go back. Varying from 0, 7%, 21%, and 28%. The effective dividend withholding taxes is 15%. So in actual fact, if we look at the effective tax both for the individual and the company, at a